Good afternoon, it's Adil Fazal here, market analyst at CFDs.com, leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com to certainly learn more. Alternatively, you can certainly visit www.cfds.education for updates and analysis. Constant charts, videos, etc. is uploaded there. Okay, a summation of European markets, afternoon update. Let's see exactly how these markets are faring. Okay, so chronologically, we had the US markets last night, certainly putting in weakness or indicating weakness, given the fact that the QE trade is more or less factored in now. As you can see here, the S&P 500 putting a potential pivot top on the 10-minute chart. We have a doji. We had a fake out, shall I say? So we had a fake out on the 10-minute chart. First of all, the weekly chart is obviously holding its resistance zone at the fib 61%, previous support equals resistance. And the daily chart, it put in a doji at diagonal trend line and previous support equals resistance as well. So therefore, indicating a potential reversal. The 60-minute chart on the S&P 500 is on the verge of breaking the key bullish channel. And as you can see here, we have this H&S brewing as well. As you can see, left shoulder here. Head has been put in, okay, at the upper channel, and then obviously we're looking to break out on the downside. The 10-minute chart certainly shows you more clearly with regards to the H&S. As you can see here, this is your neckline at 2027. Your head is at 2039. So you're looking at least 2010, 2020, 2015, etc. being hit on the downside. You have this key support in 2020, so it'll be interesting to see how and when that gets tested, okay? And I certainly expect it to do so. Okay, so that's the S&P 500. As you can see, certainly weakness creeping in, and the same thing with regards to the Nasdaq as well. The Shanghai, the Asian markets overnight, the Shanghai sold off quite substantially. The reasoning behind the sell-off was mainly due to the Sino Steel bond default being cited. Okay, and we obviously lack of potential stimulus as well, and also they may well be front running the lack of QE coming from Mr. Draghi in the next 24 hours. So several reasons. Now, the Shanghai was obviously at the 50% retracement as well, so certainly a sell-off was overdue, given that we've had quite a stellar rally from 380 all the way up to 465. Okay, so certainly quite a vicious and powerful pullback. And that obviously led to the Aussie and the Kiwi selling off as well. So you had the Kiwi sell off today quite substantially. We hit a low of 0.67. The Aussie selling off quite substantially as well. We hit a low of 0.72. Okay. Now the Nikkei was the only stellar, well, the one that was actually outperforming, and that was mainly due to the fact that even though we had weaker imports and exports data, and which is obviously bearish for the actual Eurozone, given the fact that obviously they have to export goods and services, and if imports are dropping and certainly weak, then how will they sustain their global growth and get out of this deflationary spiral that they're in at present? Okay, so we currently have the Nikkei higher, and that's on the expectations of more stimulus given the weak economic data. That may well be positive for the Nikkei, given the fact that they're expecting a weaker yen that will lift exports, but from a European market perspective, that's certainly bearish, and that's one of the reasons why you're seeing the European markets under pressure today. Okay, that's one of the main concerns. Now, we have bounced back off quite substantially on the expectations of QE from Mr. Draghi, given the fact that we're less than 24 hours away from his speech and the ECB minutes tomorrow. But having said that, the markets have regained their composure after the early sell-off. Okay. Now, in terms of the FTSE 100 itself, we had positive and negative factors with regards to the FTSE itself. The negative factors were Pearson, given the fact that its profit slumped 17% and was one of the biggest fallers today. And also we had Pearson as well. We had Pearson, and the other one, if I could remember correctly, was Home Retail. Slumped 16%, so they're obviously biggest household goods and retailer, obviously with regards to a weakness from Argos. Okay, so they were the two negative factors. The positive factors were ARM is the most destructive company apparently on the planet, and certainly did report strong earnings, along with Sky, who stated that their subscriber base had certainly increased, and Reckitt Benckiser as well rose 2.2%. So there were several obviously positive factors and several negative factors, but the overwhelming negative factor at present is the fact that the Shanghai is down quite substantially, and that obviously sent commodities lower as well, and caused weakness in the whole of the European equities sector. If I start off with the chart of the German DAX, you can see here now we are coming into gap fill, so we've certainly closed that gap on the German DAX. If I bring up the 60-minute chart on the German DAX, you can see that we had this H&S formation. We sold off initially, and then the markets reversed quite substantially, given the fact that they've short squeezed based on the expectations of QE. So you can certainly see here, we started off at 10,190, we held that resistance zone, we sold off quite substantially down to 10,107, 10,100, and then you had this powerful and very, very impressive rally from the 10,120 to the 10,250 level, and now currently is actually coming into resistance. Okay, and the 60-minute chart has failed the H&S formation. That's based on the expectations of Mr. Draghi being dovish, etc., etc. So if I just delete these key levels now, or key zones now, okay, and again we've closed that gap, and it's certainly into gap fill resistance on the German DAX at this current juncture. Okay, so we certainly are oversold at this current juncture, and we are looking for further weakness on the downside from my perspective, given the fact that the Shanghai is down almost 4%. If I bring up the chart of the French CAC now, okay, and show you the French CAC, you can see here we are back into horizontal resistance potential intraday double top. The daily chart itself again is holding that resistance zone and certainly remaining below, and therefore you are expecting weakness from the French CAC from my perspective. Again, given the fact that the Shanghai is down by 4%, etc., etc., certainly remain weak. As you can see, we had this H&S formation, the French CAC. It failed to play out due to the fact that Mr. Draghi is on tap in the next 24 hours, and everybody wants to close their shorts given the panic, etc., of any additional QE. Okay, and his attempt to jawbone the currency, sending the export sector higher. Okay, the Euro stocks, let's just quickly correspond and have a look at the Euro stocks as well, whilst we're analysing this market at present. The daily chart of Euro stock still remains subdued and remains at resistance and below resistance and holding. The 60-minute chart, the H&S formation, as you can see, certainly has failed us now, so I negate that for now, and we just have to rely on horizontal support and resistance, and that's exactly where we are at present. It's very hard for a H&S formation to play out, especially with central banks on tap, and like I've discussed a few times already, Mr. Murphy has mentioned it in his book, whenever there is a H&S formation, central banks certainly will try their best to negate it because they want to prevent a market sell-off. Horizontal resistance for now on the Euro stocks, so certainly holding. We've obviously held this base at gap fill, and the market obviously has rallied quite substantially since then. Okay, now the actual FTSE 100 now, let's just cover the FTSE itself, given the fact that it's heavily reliant on commodities and the dollar. The daily chart itself is still under resistance and has not made a higher high, so certainly on the bearish camp from that perspective. The diagonal trend line, so taking the pivot high from here, ignoring this pivot high, connecting it to here, you can see that we have obviously held that key diagonal trend line resistance. The market was making lower lows and lower highs. It had actually made a higher high, so again that needs to be respected after the potential intraday double bottom at 6,320. Next resistance zone will be 6,390, 6,400 if we propel higher. I am actually short the FTSE at 6,384, and I have amended it to break even, and I am expecting further downside given the fact that the Shanghai is certainly negative overnight. The 10-minute chart on the FTSE 100 itself certainly seems exhaustion. There was this inverted head and shoulders formation initially this morning, but I knew that would fail, hence the reason why my bias was bearish. We failed to break out. We did test the lows at 6,320, and as you can see, ever since, this market has had a stellar rally. Okay, so the FTSE 100 itself, again, I am expecting this key resistance zone at 6,386 to certainly hold. And if that does, if it does break and the market certainly is overtly bullish, then we are looking at 6,398 and 6,410. But very hard to see that occurring. Excuse me. Okay, so you have this diagonal trend line. So obviously we were holding at that current point. We did not make a inverted head and shoulders. And again, this is your resistance zone now, 6,385. Very hard for me to envisage a move above there unless Miss Yellen comes out with some fighting talk in terms of pushing rates back, etc., and is overtly dovish, and that obviously sends the US equity markets higher. Certainly expecting movement down on the FTSE itself. Like I said, my stop loss is 6,384. I was almost very close to being closed out break even, but the market, the short trade is still certainly alive, and looking at pivot low of around. I mean, you have previous resistance equals support in this region here at 6,360. If that fails, then obviously you've got this zone here at 6,350. So certainly looking at 6350 zone on the FTSE 100. Okay, going on the downside. Again, I can only see weakness at this current juncture, and the overwhelming bearish factor at this present moment is the Shanghai being down 4.5%. Commodities obviously flushed. The dollar is certainly catching support. Very unlikely to see any additional QE tomorrow, given the fact that credit conditions improved yesterday. We had some loan data, and obviously that certainly argued against any further QE, especially given the fact that Miss Yellen is going to certainly rate hikes. Certainly hike rates towards the end of this year. It's very unlikely that she won't, if not the start of the January, and then I can't see why Mr. Draghi would see the need to do QE and enact QE at this current juncture. It's very hard to envisage that. Even though markets are panicking, etc., I can't see that occurring at present, especially given the fact that the S&P 500 has put in a potential top. Okay, I think that's a wrap in terms of European markets. I must dash now. I'm getting late. I've got a train to catch, and I must depart to London. Goodbye now.